Okay, guys. So this is what we have for today. We'll be looking at the NGO, and we'll look at how does this really applies to QuickBooks. So before we proceed, I would like to confirm if we all can see my screen. So if you all can see my screen, kindly confirm that via the chat box, please. So I want to confirm if we can all see my screen. Okay, great. So we all can see my screen. So we get started. All right. So as usual, we need to have a brief understanding about that industry for us to be able to understand the dynamics before we go ahead and look at the treatment of various transactions on QuickBooks. All right. Now, the first thing here is to know what I believe we all know that, but for completeness, we just need to have a brief of what is really an NGO. So basically, is an establishment that operates independently of any government. Typically, one whose purpose is to address a socio-political issue for accountability purpose rather than profitability. So one of those key stuff about an NGO, which I believe we all know, is that their major essence is basically for accountability, not profitability, right? So it is quite different from the normal settings of a normal business we are familiar with, which their stuff, the reasons why they exist is basically for profit stuff, right? But for an NGO, basically, it is more of accountability rather than profitability. So what we are majorly concerned about is for us just to be accountable for whatever project we are to undo, and to ensure that everything is everything runs smoothly, right? Rather than looking at how much money or how much profit do we make for a particular period. So we are more or less concerned about the project, how to carry out those projects, what are those impacts each of this stuff is going to make on each of our communities and all of that, rather than being concerned about the profitability part. Yeah. Now, that is just the basic stuff about the NGO, right? Now, what are the major types? We have each of those stuff. They basically fall under any of these categories. It can be a community based, just a particular one set up in a community just to be able to reach out to people in that community and all of that. You have the civil societies. There are the environmental ones. You have the voluntary ones. You have the professional, that is the one set up by professional bodies and stuff. You have the business organized one. There are some businesses that have their various foundations and all of that. And the major essence of those stuff is just for them to be able to reach out to more people and make impacts, right? And we have the charity one. These are the likes of the orphanage homes and stuff. And you have the government organized ones, right? So any of those stuff fall in any of these types. Any of the NGO we're familiar with will definitely fall under any of these types. But one thing about it is that irrespective of the type, all of them have same thing in common. So there's no uniqueness in any of those stuff. So all of the activities still boils down back to the same. Their business mode of operations is actually the same, and no area of uniqueness, so to speak. So every other stuff happens to be the same, right? Now, those are just the major types, and here we have just a little brief. So because of the time constraint, when you get the lecture notes, you can actually go over this stuff. Just a brief about the way the NGO works and all of that. And we have the qualities. So the basic qualities here is the legitimacy, accountability, and transparency, right? So these are just the key qualities of an effective NGO. So this is just a brief, right? And then afterwards, we have what are those activities of these guys and how does each of these activity really works. So this is what we are spending our time on here today, to know what are their activities and how does each of these activity works, right? The first one here basically is treatment of pledges. Now, what do we mean by pledges? Pledges here basically is just that we have somebody that have an intention, right, or have an interest to probably give out some money in form of donation to a particular NGO, right? So in that case, the person has already made a pledge, right? It's just like you making a pledge, having an intention and interest to donate some funds, even for the fact that you have actually not donated as at that moment, but maybe you gave them a time or a date for you to fulfill the pledge. So the pledge here is basically the invoice from what we know as an invoice from the part of the normal business profit-oriented entity, right? So where you know that you have actually seen an high level of commitment from a particular customer to buy a product, right? So in this case, this is basically what we refer to as pledges. So the pledges here is just some sign of commitment of somebody to actually donate some funds later in the future. So the person might actually have given date to say, okay, I'm going to donate this amount of cash at a particular period. So that is about the pledges here. So the pledges here is given the same treatment we give an invoice, right? So for a pledge here, we give the same treatment we give an invoice, which means that you are going to book an invoice and you expect the person to fulfill their pledge at some time in the future, right? So that is one. Then two, we have the treatment of the donation itself. But there's a need for us to know that the donation is always of two types. On a very broad note, it's always of two types for whichever NGO under any of those types we mentioned earlier, right? So it can either be an individual or designated donation. Now, let me explain that. What an individual donation here means is that for those guys that just have interest, you walk up to, say, an orphanage or the disabled home and all of that, you just show concern. Maybe it's actually on a birthday or just a means. Probably you do that every month, just a means for you to support. So when you get there, you just give them the money. That is like an individual donation. So it's a donation coming from different people, right? On the other hand, the designated donation here basically is for those guys that actually, for those NGOs that are set up either by a business-oriented, profit-oriented entity or by an higher NGO in another area. For instance, we can have an international NGO that just want to have a presence in Nigeria, all right? And for all of the activities in Nigeria, they really don't want support from individuals. Fine, individual can come to support, but they already have a higher body that is in charge of funding that particular NGO. And the essence of setting them up is to probably carry out one or two projects in different areas in a particular period, right? So that's what we mean by designated donation. That those donations that will come from the higher body that sets them up. Another thing is for a profit-oriented business, they can also have their foundation, right? Like the UBA Foundation, that is Tony Elumelu Foundation. There are a couple of foundations like that that is crafted out from the business side, right? So all of these guys are actually not relying on individual donation. Individual donation will come in, but these guys have an higher body that sets them up. So those are the guys that do majority of the funding, right? So that's what we mean by designated donation. So these are, on a very broad note, these are the two areas. These are the two types of donation we have, right? And the donation, to a very large extent, is actually based on the type of NGO itself, right? So if it's a type that is being set up by probably an higher one, maybe an international NGO, one set up from a profit-oriented business, right? Or another one that is just set up just to in a particular area, just to be able to reach out to more people and all of that, right? Then aside from that, we have the project expenses. Now, there's something you need to know, that for an NGO, majority of their stuff is project based, right? So for every month or every year for a particular period, they have different projects they need to carry out and stuff, and the main essence of each of these projects is not for profitability, like I said earlier, just for it's basically for accountability and to ensure that they carry out the project based on the intentions. All right. Now, there is a need for us to track each of these projects, right? So basically, we're actually not tracking this project for profitability purpose. That is what we are aware of in the normal profit-oriented business settings, right? But the basic reason why we are tracking this project is to know that if probably we actually spent more or we spent less than what we actually make plan for, right? Because at the inception, we already drafted out all our programs and we have the amount we expected that, okay, on this project we are going to spend, right? So we want to know if we actually spend more or less, and aside from that, we also want to know if we have some amount of money left on that project, which is going to be carried over to another project, same project in that same category, probably in the following month or in another year, right? So the essence of the project here, like I said, is not basically for profit. That is from what we know earlier from other profit-oriented businesses. But the essence of the project here is for us to be able to know how much money we spent on that project, and again, how did we spend more or we spent less than what we actually make plans for, right? Then about the project tracking, like I said now, that is just the basic essence of project tracking, right? So majority of their activities, virtually all the activities, hardly will you see them in a month without carrying out one project or the other, right? For instance, like a community-based kind of NGO, those guys, they just go to different communities. They have, most especially those guys in rural areas, they have a couple of stuff to do, right? And probably when they get there, they just check around and see what way can they impact those guys in that area. Let's say, for example, you get to a rural area and decide to probably set up a rice milling factory, for example. That happens to be a project, right? So the essence of this stuff is not that we're actually expecting anything in return compared to what the normal profit-oriented guys will do, right? So we are not setting this up basically because of the fact that we actually want to get any economic benefit in return. But basically, we are just doing that because this is just the reason why the stuff is being established, right? So to a very large extent, we're actually not concerned about the profitability here, but about the accountability, just to ensure that the whole stuff has been carried out in line with those intentions we have earlier, right? So to a very large extent, the project tracking is way more different. Fine, actually same process, right? But it is way more different from the profit-oriented guys' own, right? Then another thing we need to know is about the taxes, right? We know quite alright that basically they are exempted from tax, right? But in their dealings, they actually have staffs. They are actually not exempted. So irrespective of the fact that it's an NGO, so those staff are still entitled to pay, right? So that is one part. Then on the other hand, they actually enter into a service contract or contract of supplies with other taxable guys. So these guys too, they also have the obligation to also deduct, to also withhold some amount of tax based on the type of company, maybe a limited or a business firm, right, or a multinational, whichever one. So they also have the obligation to deduct some amount of funds from these guys, right? So because those guys are actually not exempted, And this is what they're also going to remit to the relevant tax authority for those guys to use as the tax credit to offset their future tax liability, right? So on a more broad note, the only tax applicable to those guys is just your WHT and payee. So we actually look at how does this really work in the context of an NGO, right? So basically, these are just their major activities and their area of uniqueness, right? So we have the pledges, you have your donations, either individual or designated ones. There are the project expenses and the tracking of those projects, and the taxes applicable to those guys, right? And how do we treat them, right? So these are just the basics, what we need to know before we look at how do we really treat this stuff on our QuickBooks, right? So before I proceed, so I'd like to welcome maybe 2 questions about what we have discussed so far before we look at the practical aspects, right? So do we have any questions before we proceed? Okay, good. Now let's take it one after the other. So for those pledges, like I said earlier, basically the treatment we give to these is basically for your invoices, just the same treatment we give to invoice. And I explained that earlier, that the way the pledges work here is just that you have some guys that actually have interest, or probably they have intentions to support, right? And you have seen their level of commitment, and they made a pledge. So a pledge here is just committing to say that, okay, we are going to donate this amount of money on this particular date, right? On the other hand, it might even be that they have a particular amount in mind and they donated parts, and they made a promise that, okay, we are going to add the other balance sometimes in the future. So I'm also going to treat that as a pledge, right? But all things being equal, we expect that you're just working for an individual donor. You just come, you give out the donation and leave. But in some instances, we have some guys that will actually make some pledges and fulfill those pledges sometimes in the future, right? So the kind of treatment you give to this stuff is also the same treatment for those invoices we actually discuss under the profit-oriented settings, this profit-oriented business settings, right? So so right here now, before we proceed, there's something you need to know, that basically when installing your QuickBooks, you have the option for customizing it in line with a particular industry, right? So one of those industry is this NGO, right? And the essence of this is just basically to redesign the dashboard to some of those terminologies that are being used in those industries, right? So for instance, the one I have here basically is a general business kind of setup, right? So for instance, if the installation is for an NGO, right? Under your create sales receipt here, instead of create sales receipt, we are going to see receive donations, right? It is the same thing, all right? So it's going to just the change of the name to suit the terminologies that is being used in that industry, right? On the other hand, when you come to your create invoices here, you are going to see make pledges. So the make pledges here takes care of the normal pledges that is being made by prospective donors to drop some amount of funds sometimes in the future, right? So these are just the two key changes you have, just to drill it down to some of those terminologies used in those industries, right? However, it does not affect the whole operation. It still remains the same. It's just the change of those names, right? So for a pledge, you basically use your invoice, all right? So on your invoice, under the customer job, you specify the name of the prospective donor. You just click on add new and set them up as a normal customer, right? Then when you are done, you specify the name here, right? And like I said earlier, that you also, or before you even proceed, we need to also structure our charts by setting up, all just like we used to do, all the bank account, the income, the expense, and all of that. So for the income, you set up the income for donations. You can break your donations down to individual donations and designated donations, right? So on a broad note, these are the two types of donation we have, right? So, and having done that, you can still go ahead and set up the items for each of these donations, right? So if I come to my charts, so you come to your company chart of accounts, you click on account, then new, right? So here I specify, so let's say we want to set up the income account. So I specify the income. So like I said, we can have two. This can just be donations, which can be a parent account, right? So I can save a new, and I have another one. I can call it individual donation. All right, it's going to be a sub account to donation. I'm going to save a new. Then you have designated donations. All right, it's also going to be a sub account to your donation, right? So I'm going to save and close. So when you scroll up, you can see that we have these are the two forms of donations, right? Then you can go ahead to also set up basically we don't have a cost of sales, so to speak, because majority of our stuff is just to take those donations and use it to fund projects, right? So basically we just have expenses. But the key thing here is, aside from the P&L, one of those key stuff we always want to see from time to time is the project report, right? So that we want to know how much money we have actually expended on each of those stuff compared to how much money we actually made plans for. So we want to know if we spent more or less, right? So I haven't created the income account, so we just set up the item, right? So you come to your list, your item list, you click on item, then new, right? So it's going to be a service. Then you have your individual donation. So you link this directly to the income account, right? Then you click on next. Then we do the same thing. All right. So we also link this to the income account. Then you click OK. All right. So we have set that up. So the next thing now is to create a pledge. So like I said, is equivalent to creating an invoice. So you come here, click on this drop down, select the prospective donor. If you don't have it, you can quickly click on add new, right? Then under the item, you specify if it is an individual or designated donation, right? All right. So your description, so you put the description here, then you specify the amount, right? So when you're done with that, you go ahead and save, right? So you have it right here until the person fulfill the pledge, right? So at the point when the pledge is being fulfilled, so I'm going to put a description here. So we have a donation for youth empowerment. So we can put that, right? So I'm going to save and close. All right. So you have it here as a pledge. So by the time the donor fulfill this promise, it means that they have actually paid the money into the bank, right? So you can easily use your receive payment to, so you come here, specify the customer, so you can see that you have it popped up here. So you can just tick it, and under the amount here, you specify the amount paid, then specify the bank account it was paid into, right? Then specify the date, then tick. All right, then you can go ahead and save and close, right? So it means that we have actually received the pledge, and we are not expecting any money from this donor again, right? So that is on one hand. Then on the other hand, if you receive donation, so most of the time the funds we receive are always on cash basis, right? So most of the time we have guys that come in to support a particular project, or if we have a designated donor, we send an estimate to them on a particular project we intend to carry out, and the programs and all of that, and we send them the total estimate and stuff, and probably they approve it and disburse the money to our account, right? So most of the time the donation is always mostly on cash basis, right? So I use my create sales receipt to treat that, right? Okay, so I come to create sales receipt here. So it's pretty simple, just what we are familiar with, and you specify the donor, right? Okay, so specified where the money was paid into, then I specify the item, if it's an individual designated donation, right? So let's take, for instance, we actually have a project to carry out, and the project basically is we want to set up a rice milling factory for the women in a particular community in Ondo State, for example, right? So we have a designated donor, right? And I've actually submitted the project plans to them and all of that, and the funds is being disbursed to the account, right? So to record that, now you use your sales receipt, right? So like I said earlier, if the installation is actually for an NGO, so instead of seeing your sales receipt here, you're going to see receive donation. So it's the same thing, right? So here I specify the so I'm going to come here, let's specify the donor name. So let's say United Nations. Okay, now another thing we need to do is to set up the project, right? So like I said earlier, that majority of the activities here is project oriented. So most of our stuff is actually based on projects, and at every point in time we want to monitor how much money was expended on each of this stuff, right? So what we do, all right, so what we do here is to set up the project, and just the normal way we set up our job, right? So you come to your customer center, so you click on customer, then your customer center, right? Then at the upper left hand side, you click on new customer, then add job, right? So the job name, so let's say rice milling factory, that is a project, right? So we have a rice milling factory in Akure, right? This is a project, right? And this is what we refer to as a job here. So we want to know how much money we expended on this project, all right? So you specify the customer, which is the designated donor here, right? Then I click OK. So we can now go back to receive the donation now. So your create sales receipt, I specify the donor here, all right? So specify the project, right? So what bank the money was received into, then the item here, designated donation. So I come here and say donation for rice milling project in Akure. All right. So we actually received a 25 million, right, on this particular project. Are we good? So I'm going to save and close, right? So I've actually received the funds for this project, right? So the next thing now is to expense out. So we pay, we go to the community, we secure a space to carry out the project, to set up the factory, we clear the land, we bought the milling equipment, we employ people there, we bought a sample rice to test with the machines and all of that. So these are all the project related expenses which we also need to link with those projects, so that at the end of the day we know how much money we have actually expended out, and to now check if we have any amount left which we are going to use to fund other projects, or which we are going to use to fund similar projects in another place. All right, so how do we go about that? So for every of the expense we process for this project, so you have to link it with those projects, right? So to post all of your expenses, you use your write checks, right? So you come to banking, then click on write checks, and you specify where this money was paid from, then pay to the order of. So you can easily add a vendor. All right, we click OK, and so in your memo here, so let's say clearing of sites for rice milling factory setup, right? So this is one of those expenses. So what account does this go to? So we can easily create an account to keep track of all projects, right? So I can create an account. It's going to be a project expenses. Right? Okay, so we fix in the amount, so we pay 120,000 for that, and I'm going to save a new. Right. So on this same project, we actually paid for constructing the factory, right? So we also do the same thing. All right, so these are the guys we gave the job to. So you fix a memo. So we have a payment construction of all right. So we do that, and you also take it to your project expenses. All right. So we actually paid 6.2 million for that. Then remember to link it to the project here. So you say your rice milling factory. All right. Save and new. Then we also paid for the acquisition of all of those milling machines. Right. Now, under normal circumstances, for a normal profit-oriented business, you know, almost especially if it's for a rice milling factory itself, this all of these machines qualifies to be a non-current asset, right? But in the case of an NGO here, it happens to be part of their project expenses, right? Because they are not in control of this stuff. This is just part of the project they need to carry out, right? So they are not the one in charge of operating the stuff, and they won't be the one to get the economic benefit associated to that stuff, right? So in their own books, just a normal expense, right? But to those guys, that is the factory, they can recognize it in way of grant, right? They recognize it in way of grant, right? As a non-current asset, right? Now, we also bought this from these guys. So we bought 5 new milling machines. All right, so that goes to our project expenses. So we have we bought 12.3. So we can just copy this, right, and paste here. Then this also you link it to the rice milling factory. That is the project. All right. So also we also expended some funds on sensitizing the people, gathering them together on for the opening ceremony of launching the factory for the people in that community for their usage, right? So we had to get some food and all of that for the ceremony, right? It's also part of the cost, right? So we do the same thing. Right? So you put the flag of ceremony. All right. So this also goes to your project expenses, right? So we spend 240,000 for that, and then we also have to link this to the project, right? So I'm going to save and close. So basically, those are all the project related expenses, right? So I think for the first one, we actually did not link that to the project, so I can just open that up to correct that here, right? So you can see that, so you link it to the project, right? Now, so the basic essence of this, like I said earlier, is for us to be able to monitor each of those projects to know how much we have actually expended. All right. Okay, so how do we go about that now? So we want to see this project, how much donations do we receive on the project, how much have we expended out, and we want to know if the amount we have received is also what we spent out, or we still have some funds, right? So how do you go about that? So you come to your report, come to job time and mileage, and you come to your job profitability detail. So you can either use the detail or summary. So select the job, which is your rice milling factory, right? Then you click OK. So we can see here that for this particular project, we actually received a 25 million, right? You can see your designated donations, all right? And under the no item, these are all the amount we have expended in summary. So I can double click on this to see the breakdown. Can you see? So on this now, we actually pay for the clearing of site 120. We have construction a 6.2, the purchase of 5 new milling machine a 12.3, and the flag off ceremony. So in total, we actually expended in 18.860, right? So at the end of this project, we have a 6.1 left as the excess, right? So for this particular project, it means that we still have some funds of a 6.1, which can either be used to fund other projects or to fund this similar project in other areas, right? So we can easily submit this report to the designated donors to see, that is the accountability part, to see how much we actually receive from them and how much we expended out. And they can also, okay, we have this amount, this balance left for us to use to fund other stuff, right? So this is how you have it for all of those projects. Irrespective of the number of projects you have, what you need to do is to ensure you set it up and you link it with all the donations you receive for that project, as well as all the funds you expended out on that same project. And at the end of the day, we want to know how much money we have left on that project, right? And so we'll be able to compare with what we actually made plans for before in terms of the estimates, right? And to know, okay, that we have other available funds to be expended on other stuff. All right, so this is one of the key areas, or this is one of those stuff they do most of the time, right? So we have a whole lot of projects to carry out. So at every point in time, we want to know how much we have actually expended on each of those projects, right? On the other hand, if a particular project involves individual donations, you receive donations from different people, so you have posted all of those donations as well individually, and you have everything listed out here, and you have the total amount received, right? And you also have the total amount expended. So the key thing here is to ensure that you actually linked all of those projects to all the donations and also to all the amount we expended out, right? So this is one of those key areas, right? So at every point in time, we want to know how much money we have actually expended and what we have left, right? Now moving to the tax aspects. So like I said earlier, we are actually exempted to tax, and the areas we have here is we filing payee for the staff, and the area of withholding. So if you engage in a contract of supply or any contract of service with other guys that are not tax exempt, right? So we have the obligation to deduct withholding tax from their money, right? And remit same to the relevant tax authority and send them the withholding credit notes, right? So how do we go about that? So we are going to take a scenario now on how we account for a withholding tax should in case we engage with other guys that are not tax exempt and we have to withhold some funds from their money. So how do we go about that? So what we do is, take for instance that on this same project again, we also have to We also have to hire some equipment, right? So we'll hire some equipment which we have to return just for the purpose of setting up the factory. So how do we go about that, right? So for you to account for a withholding on a particular supplier transaction, you need to ensure you use enter bills, right? Because the reason why you need to use enter bill here is because of the fact that all of the money is not what is going to the supplier. So it's more like you made a part payment and the remaining balance is treated as a withholding tax, which is going to be remitted to the relevant tax authority. Right. So what do we do? So first thing you need to do is you need to ensure you create a withholding tax payable account. Right? So how do we go about that? And that's going to be your current liability. So we have new. Other account type is going to be other current liability. So let's have our withholding payable account. So you have withholding payable, then you save and close, right? So we have our withholding payable account now, right? So we engage into a contract of service, and we hired some equipment, and we had the obligation to withhold, let's say 5%. The company in question is actually a business name, right? And we have to withhold 5% out of their invoice. How do we treat that? So take note, when you are processing a transaction that has to do with withholding tax for a particular vendor, you don't use write checks, right? So you use enter bills, then pay bills. Why do you need to do that? You need to do that because this is treated like it's a part payment, right? Because we did not pay the whole 100% to the supplier. So I didn't mean we pay the whole 100%, we use your write checks and you just post your expense normally, right? Normally, you can even use your write checks to post the percentage you paid and maybe use journal to post the rest. But professionally, for you, all of these transactions to pass through that same supplier account, that is why you need to use your enter bills and pay bills, right? So you enter the bill for the whole amount, then use your pay bill for both the amount you paid to them and also the amount you withheld, right? Now take for instance, you come to your enter bills right here, or you click on vendor, then enter bills, right? So we actually, for this particular project, we hired an equipment, right? So you specify your vendor here. All right, and specify your basic terms and all of that. So so we have equipment hire. All right, then you specify the account here. So that also goes to the project expenses, and let's say the amount is a 200. Right? So the amount is 200, or let's say 500, right? And you can just copy and paste your description. You link it to that same project, that is your rice milling factory. So we save and close. All right. Now the total amount is actually 500, and out of that 500, we paid 95%, which is the 475, and we withheld 25,000. That is the 5% as a withholding tax. All right. So how do we go about that? So you come to your pay bills, and this is the amount, right? So you do a payment for the 475. All right. Then you specify the bank, normally from Zenith Bank, the date and all of that. Then you say pay selected bills, right? So we have actually paid the amount, and with this, for deducting that withholding tax, we are not indebted to this particular supplier again, right? So we also need to take off that amount out of the supplier's account, so it does not show that we are still owing them, whereas we are not owing. We have actually deducted some funds which we are going to remit on their behalf to the relevant tax authority, right? So what we do here you come back to your pay bills, and then you discover that for that particular course you still have 25,000 left, but in real time you're actually not owing. So this money here is a withholding tax, right? So what we need to do is to probably transfer this money out to the withholding tax payable account, right? But you're going to be surprised that when you tick this and you come under the account here, you can't find any other thing here aside from a cash or bank account, unfortunately, right? And your withholding tax payable account does not qualify to be a cash or bank. It's actually a current liability account. So how do you go about that, right? We want to transfer this out from this supplier's account so that we are not owing the supplier again, because in real time we are actually not owing. This money is meant for the relevant tax authority, right? So what I'm going to do here is to come here and say set discount. All right, amount of discount is going to be the same, 25,000, which qualifies to be the withholding tax. Then your discount account here is going to be your withholding payable that we created earlier. All right, so you scroll up and look for the withholding payable account, so you can easily search it out, WHT. So these are withholding payable accounts. All right, so you can see now that the amount to pay now is 0. So which means that we have transferred this amount to the withholding payable, right? So I just say pay selected bills, and that's all. So you can see that we have 0 amount to pay. Done. So when I come back to my pay bills, you discover that that bill is gone, right? So I've actually transferred the 25,000 to the withholding payable account, right? So by the time I now remit this money to the relevant tax authority, it does not belong to me, right? But I need to just fulfill my obligation by deducting the money at source. All right. Now, by the time I remit to the relevant tax authority in real time, you just raise a journal by debiting your withholding payable account to take that money off and credit your bank. So with that, you have balanced the 100% of that money, right? You paid 95% to the supplier and you paid the 5% to the tax authority, right? So this is just majorly one of those tax they handle. So majority of the project they carry out, if those suppliers happens to be the normal profit business oriented guys, then they tend to deduct money from their payment, right? Because they are obligated to do so, and remit to the relevant tax authority on their behalf, so that those guys can actually claim those funds as a tax credit against their future tax liability, right? So because they have a lot of project they carry, so they spend a lot. So most of the time they have tons of withholding tax and all of that to handle. So basically this is just how you do that. So use your enter bills to capture the total amount you expended out, right? Then your pay bills to capture the part you paid in real time to the supplier, and the balance you transfer to the withholding payable. And as soon as you remit those funds to relevant tax authority, so you just go ahead and raise your journal. It's just as simple as that, right? So one of those things, they don't have anything to do with CIT. We know that. So one of those key things they handle in terms of taxes is basically withholding taxes, and their payee is just normal raising your journals, your salary journals, by just debiting your salary expenses and crediting payee payable, right? And when they take the payee to the state inland revenue service, you just debit payee payable and credit your bank. All right. So at the point when the payee is deducted from the staff salary, you debit your salary using your journal and credit payee payable. Just taking into consideration that we have actually deducted and we have not remitted to the tax authority. So as soon as it is remitted, you just go ahead and debit payee payable to take off the funds and credit to your bank, right? So these are just the two taxes, but majorly withholding taxes, we have a whole lot of stuff. We have a lot of people we deal with and all of that, and we have to deduct either 5 or 10% depending on the type of company at the point when we are making payment and stuff, right? So basically, those are the area of uniqueness compared to the normal conventional business settings. So like I said earlier, they deal with a whole lot of stuff relating to project a lot, so they manage a lot of projects. And the essence of managing this project is basically because of the fact that they want to track the profitability for this stuff. No, they want to be accountable for this project, not the profitability. They want to be accountable and to know how much they have actually expended on this stuff and how much they have left, either to be used to fund other projects and stuff. Right. So so that is basically about this, guys. So I would like us to ask one of questions, and so I can attend to that. Right. So you can shoot. Hi guys, questions?